Trent Bradshaw with Bradshaw Financial Planning and Mind Your Money. Thank you for joining us for this market update. Today is February the 28th, 2022. A couple things we're going to talk about today. We're going to touch on earnings. Here we are getting to the point where most of the companies on the S&P 500 have reported, so we'll talk a little bit about that. Secondly, we're going to touch on the 10-year minus the 2-year spread and give you an idea of what's happening with the yield curve now and how significant that'll be to us as individual investors and also to the overall economy as a whole. And then last but not least, let's talk about the war over in Ukraine, between Ukraine and Russia. You know, have we seen this before? What kind of impact has it had long term on the market? All right, let's take a look at the S&P 500 earnings and sales growth. So what you'll see for the first quarter, obviously we've had good year-over-year earnings, good year-over-year sales growth, and what it accumulates to, out of 500 companies, roughly 471 have reported. Over 90% have reported their earnings at this point. And what you'll see, average sales growth over the last year has been somewhere in the neighborhood of 16.47%. Pretty impressive. Nice growth. Earnings growth, though, has been 30.13%, which is pretty significant year over year. We normally don't see that. Obviously, it's been a great rebound. You got to remember, though, first quarter of last year, we started to get the vaccines. We started to get everybody back rolling. So we expected to see some acceleration in sales growth so far in the first quarter, and we felt like the market would be great in the first quarter. But lo and behold, here comes the Fed talking about being aggressive in interest rates, and it caused a lot of volatility to kick back in, a lot of instability, and we're battling volatile markets at this point, obviously negative markets at this point. What we do see going forward, though, is the second quarter is going to be very challenging. We've talked about this before. We see sales growth starting to slow. We also see earnings starting to slow, and this is year over year, and that's the way Wall Street's going to look at it. So we do foresee some challenges here in the second quarter. But again, let's talk about why the concern pops up. The Fed is talking about increasing interest rates at a pretty significant rate. They're wanting to be more aggressive. We've heard anything from a half a point to a full point for the March 16th meeting. Well, to kind of prove that point and how serious it could be, we pulled the forward 2 minus the 10 spread. And what you'll see here is we're approaching zero. What that means is the yield curve is starting to flatten out. When it flattens out, that's usually a precursor to potentially a recession. And if the Fed is aggressive in increasing interest rates into that, as growth and also the rate of change in regards to inflation is kicking in and starting to reduce, we could be facing some challenging times. But I will say this, the probability of an aggressive rate hike has come down significantly. And one of the reasons why is because of the Ukraine-Russia instability at this point is what we'll call it. The military action that's been taken by Russia on Ukraine has caused a lot of the inflationary environments of commodities, oil, and others to accelerate at a pretty rapid pace. That's also brought about concerns to the Federal Reserve. Now the probability of a rate increase has reduced to where it's about 82% chance of a 0.25% increase on March 16th. That's more reasonable than what we thought 2 weeks ago, but obviously there's been some drastic changes during that time. So let's see what happens. March 16th, again, is going to be the magic date. We need to pay attention, 2 p.m. in the afternoon, see what the Federal Reserve is going to do. The other concern, obviously, is the war that we're seeing over in Ukraine. Have we seen this before? What does it mean for the market long term? Well, this next chart that you'll see, obviously, is showing you a lot of past events. And then ultimately, long term, what has happened to the overall market? It has continued to rise. So in the short term, that could be in the next few months, it could be in the next year or so. Yeah, we may have some challenging markets, but longer term, usually the market takes over, the U.S. economy is resilient, and we start to get back on the right path, and this chart proves that. This is Trent Bradshaw with Bradshaw Financial Planning and Mind Your Money. If you got any questions, feel free to reach out to us. Join us on social media so we can bring you the updates. Look forward to speaking with you soon. Hope you have a wonderful week.